Hello and welcome to another attempt at vlogging at FT Alphaville. Today we are joined by Hubert Horan, who is a transportation consultant based in Phoenix, who has been in the transportation industry for 40 years, starting with the major industry restructuring of the Eastern Freight Railroads in the US and the bankruptcy of the Penn Central Railroad. More recently, he's been looking into Uber's business model, and you may have come across his work on naked capitalism specifically, but we've also been quoting him quite a lot. So thank you for joining us, because today we're going to be talking about your key area of expertise, the aviation industry.
Good to see you again.
Your main point is that the investment world hasn't really appreciated the scale of the downturn that's incoming, and we are still living in a bit of a delusion in terms of the recovery that is going to be happening in airlines more generally.
Correct. Just as background, I've been in the aviation business for over 35 years, mostly as a consultant, but I've worked for airlines such as Northwest and Swiss Air. I've been involved with lots of airline bankruptcies, mergers, the development of alliances. So I have a pretty reasonable perspective. I mean, my career was basically at the point airlines were deregulated. Okay, you now work for one. How do you make money off of this? The quick overview of where the industry is this collapse has been so catastrophic, substantially worse than anything in aviation history. After the dot-com crash in 2000, the industry faced a 6% demand drop, and that put 75% of the US industry into bankruptcy. Okay, we now have a 75% drop in traffic and an 85% drop in revenue, and everyone is treating this as just another cyclical downturn. This isn't a case of a ship going through a bad storm. This is a case of a ship that has hit an iceberg. Past industry crises were sort of concentrated on a few select problematic companies or regions of the world. This has crippled everyone globally. I'll talk mostly about the US industry, and you can pose questions about other parts of the world, but the numbers just happen to be a lot more solid on the US side. The big four US airlines had a second quarter GAAP loss of $13 billion just for the quarter and a cash drain of $15 billion. Southwest CEO came out last week and said just to reach cash break even, business would have to double from current levels, and every other US carrier is in even worse shape. There's just no way that airlines can rapidly cut the billions in cost needed to restore positive cash flow given this kind of catastrophic demand collapse. The two most important drivers of airline profitability, which is to say corporate travel and long-haul international, have been obliterated. There are pockets of domestic travel that are kind of hanging on a little bit, but the thing that drives all the money are gone. Some, for the first time, unlike any other past crisis, a lot of the demand destruction is likely to be permanent. People are adopting to video conferencing. People are realizing that maybe a lot of those tickets they bought in the past really weren't worth all the hassle and expense. At the point we get any kind of recovery, we're going to have much higher fares, which is going to push away a lot of demand. Globalization is not going to be what it was. So best case, we never get back to where it was. And the beginnings of a real recovery can't happen until people, which is say mostly business people, are really comfortable buying airplane tickets in the way that they used to be. And that process hasn't even begun. And absent proven and reliable and universally available vaccines, no one has any idea when it could even begin.
Obviously, coronavirus has changed everything. You've discussed about how people are not going to be flying necessarily, but this Zoom interview we're doing right now is sort of evidence of the fact that Zoom is not perfect, and certainly there is still this face-to-face need, because these connectivity issues are not going away anytime soon. Do you think that perhaps you're being a little bit over pessimistic on the sort of permanence of some of the business restructuring in terms of executive flying, etc.?
Well, two dimensions, and readers who see sort of what happened to the overall GDP after 2008 or any other given crash will have seen these kinds of curves. The demand shoots down, and then there's some kind of ratchet back up to the old normal, or there's hope for. And what I'm saying is that the collapse down right now is far, far bigger than the industry behavior and media coverage would lead people to believe. All of the folks in the industry have been saying, oh yeah, but the model was based on we'd have not full recovery, but you'd see full evidence of business travel, corporate travel back to where it was by the fourth quarter of this year. No, in fact, we're seeing no business travelers are just not getting on planes. Now, extrapolate out into the future, there are two issues. One, to get back to whatever the future normal won't be a 1 year, 2 year thing. It might be a 5 or 6 year. And if you're a private investor-owned company, you can't survive the 1 or 2 year collapse in cash flow, and you certainly can't survive a longer one. And the second element is it's never going to get back to where it was. Could it be 90% in 6 years? Oh, sure, maybe. But there's trail of bankruptcies between here and there.
So in terms of the carriers who are most vulnerable, who are we talking about?
Well, in the near term, any of the carriers heavily dependent on long-haul international travel are highly vulnerable. And carriers that just do the short-haul / domestic are marginally less vulnerable. So in America, Southwest less vulnerable, Delta, American, United highly vulnerable. Air China, China Eastern have a mixture of long haul and domestic. Cathay Pacific is pure long haul international. The major classic flag carriers in Europe, KLM, Air France, Lufthansa, BA, all of their economics are driven by long haul international. They may fly a bunch of narrow bodies to feed into their hubs, but the business is the long haul business.
So, obviously, I've been on airplanes in the last few months, and it's clear to me that the model doesn't, you cannot, we're going from an environment where you would be overselling flights, cramming in people like to the nth degree. Now you're having to put, in some cases, spare seats in between people. In terms of the beverages, it depends on what airline, but the airlines that subsidize themselves with or supplement their revenues with food and drink sales, that in itself is also being constrained by ongoing sort of fear about taking off your mask during travel. Is there, in terms of like the economics of flying in the coronavirus setup, what sort of scale can be permanently sort of sustained? What sort of dynamics, rather? Because it seems to me we're going back like 50 years or something in terms of the capacity and the efficiency of that sort of payload relative to what it used to be before coronavirus.
The demand is going back many, many decades. The problem is the business model completely fails unless you optimize the efficiency. You fill the plane with people.
Exactly.
If that's a DC-6 in 1958, you had to fill the plane with people to break even. You couldn't, and like many other industries, restaurants can't survive at 30% capacity. They were all designed, where on weekends they were at 110% of capacity. And just the economics fail completely. A chemical plant can't run at 30% capacity. The whole economics of the business are built around that level of matching costs to revenue. And airlines in the pre-pandemic environment, we can all talk about 80 questionable things airlines do and how they annoy us and whatnot. But the business model from a high level worked. They had figured out we need these computer systems and we need these maintenance bases and we need these pilot training programs and we need this amount of airport facilities and so on and so forth. We need, they tied in to $1 gazillion of financial commitments, airplanes and everything else, because they had a very good handle on what demand was.
Right.
Demand doesn't, again, I said a 6% decline in demand was awful in past crises. An 85% decline in demand is the meteor striking Earth and killing all the dinosaurs.
And this is really the key issue. I mean, it's that metric that really struck me that you pointed out, which is why then are we in a sort of a kind of, I guess, why is the investment community not like screaming red? I mean, obviously we've seen Warren Buffett move out of airlines, but other than like some major signals like that, I mean, and you're hearing about like, everyone from Richard Branson to the, European airlines all over the shop are asking for support packages, but there hasn't really been a questioning to, I think, of the core business models. So why do you think that is then?
Well, go back to the start of this in March. The industry came up with this narrative that said, oh, we're going to have this really rapid V-shaped demand recovery. And as I mentioned before, including that the most important business international segments, they wouldn't be back to 100% of what they were, but they'd be working great as they always had been by now. Obviously wrong. And okay, on March 10th, a lot of people weren't ready to grab their arms around the magnitude of the coronavirus crisis. But the point of the narrative was to say, hey, because this is just a short-term blip, totally justifiable to give the US example, taxpayers ante up $50 billion.
Mm-hmm.
That'll see us through the storm and then we'll be fine.
Yeah.
Plus, and this is where with the current answer to your question, the point of the narrative was to say, hey, the people who run the industry, the investors in this, leave them in charge. Don't do anything. Now, in any normal business collapse, you call in the bankruptcy lawyers and you go through, wait a minute, if revenue and costs are this far out of whack, if financial obligation, we have all these obligations we can't possibly pay, if we've committed to all these airplanes we won't need ever, you file bankruptcy and you work out a plan to distribute, you downsize to what is a sustainable company going forward and distribute the ugly pain of that somewhat equitably following the loss. Yes, lots of problems how that works in real life, but that's the problem. The point of the narrative was, we want to block that. We, the people who own United and American, want to maintain control. Some of that may have been magical thinking about, well, if we get bailed out, the value of our stock goes down, but we still control the company and the equity is still there. Obviously, in a bankruptcy scenario, the equity is the first thing that gets wiped out. The bondholder is the second thing that gets wiped out. So this is protecting the equity in bondholders and the control of the current senior management teams who work for the equity holders and bondholders. So they put out this narrative that was by April, anyone with their eyes open who'd read a newspaper could say, this is not a V-shaped recovery, business travel has stopped. There isn't going to be a vaccine next week. When all the professional sports teams stopped playing in March, oh, but we'll be back in 3 weeks. You can understand with hindsight that first thought, but 3 weeks later, everyone knew that was false. But the narrative is still powerful in the industry. No one, the only public discussions in the media or in industry channels are dominated by the people, who is tied to keeping the old status quo intact. Which means 5 months have passed. We hit the iceberg 5 months ago. We've been taking on water for 5 months, and we've been doing lots of things to sort of improve the service in the dining room, but we haven't fixed the gash in the ship at all, and pretending it's not there. No one in the media in the last 5 months has stopped to say, well, wait a minute, okay, we understand how this action started. Let's look at data and see if it has anything to do with economic reality. Nope, it doesn't. What these airlines are telling us is nuts. No one's done that.
So
and obviously you have the complication of you do have borders. So if Ryanair are, but we want to go back and carry fairly wealthy people from the UK to see for vacation time in Spain, and then all of a sudden there are quarantine rules, that's, we can fly in China or the United States or Argentina, you can still travel domestically without those kinds of restrictions. But this is, after the nuclear bomb hit, who are the people who are going to die immediately and who are the people who are going to die of radiation poisoning 3 months from now? It's a subtle, perhaps not the most important distinction.
I think one other question I have is how flexible are these business models to, say, unexpected reoccurrences of coronavirus or new kind of shutdowns? Because it seems to me there's an assumption out there that these businesses, whether it's not just airlines, it's obviously also restaurants and almost every other social leisure focused business out there, there's an assumption that they can just shut down and reopen, but there's a huge cost of capital just in terms of of bringing these businesses in and out and restarting them, expanding them, contracting them. That in itself is a challenge. It's not just the fact that there's been this collapse and sort of muted recovery. It's the fact that within that recovery, we're still we've got this sort of potential uncertainty. It's a continuous wave of stop starting, right? So, and it's unexpected. It's not like a seasonal, we can predict certain seasonal trends, whereas with this, we can't, presumably.
Well, everyone treated this as the equivalent of a hurricane devastating a small resort town in Florida or the Caribbean. And so all the little hotels and cottages and shops were devastated, but the storm passed and and some of those people lose their life savings and that's nasty, but we can rebuild everything. The beach will still be there. This isn't a one-time storm that's passed and it'll take a little rebuilding, but we can go back to the way it was. That's what people aren't dealing with. In other words, if you've had any, and you can go through all the other industries devastated by the coronavirus. The economically sensible approach is to say, wait a minute, we can't hemorrhage cash like this. If we go and get court protection, we can substantially reduce that problem. No one's doing that. As you say, the entire cost structure, all the assets, all the airplanes, all the airport leases, airlines are way more capital intensive than hotels or restaurants or shopping malls or whatnot. And so adjustments are way, way harder. And rationally, you shouldn't, in 10 minutes, you should be in bankruptcy court. You might not survive through bankruptcy court either, but guaranteed you won't survive just pretending this is a storm that passed and will go back to normal.
And so within that, so knowing this, what what does the future look like? What is the reality that we're not facing up to? What is going to happen to all that excess supply? What's going to happen to all those contracts, all those airline leases, to all the kind of airline capacity, the slots? How can we, manage that?
Well, the airlines are important to the rest of us because they really do create huge economic benefits. They are one of the ways that a lot of travel and trade happens. They create huge amount of employment. They support an awful lot of external economic activity. The first problem is no one is stopped to say, wait a minute, that economic activity ought to be our focus. The entire focus is how do we protect the senior executives and the specific people who have invested in Delta Airlines.
So it reminds me a bit of...
And by definition, I understand if you're one of those investors, that's the way you're going to think. And if you're the CEO of Delta, your job is to do whatever it can to protect those people, reality be damned. But from the standpoint of the world, the economy, the question is, given this meteor hit, how do we take this industry as a whole, minimize the waste, and get us back to a cash positive thing as quickly as possible? So for instance, one of the things that would need to happen in a future industry world is ensure maximum level of competition. Well, the people that have been owning Delta and Lufthansa and British Airways and American and United for the last 20 years have all realized that far easier to make money by eliminating competition. Mm-hmm. And sort of the process that's involved where governments had said, no one's ever faced a catastrophic revenue decline, but the markets can solve it. And we don't have to do anything. And no one needs to stand and protect the interests of the consumers, the workers, their suppliers, and again, the overall balance. The people who run these airlines are going to be looking out narrowly for the interests of investors. They're in charge because everyone else has abdicated any responsibility. Therefore, we get this bailout money that is going to pay off the Boeing and Airbus leases for planes that no one needs and no one will ever fly on. That's just taking money and pouring it down the drain. As opposed to the classic bankruptcy, we put a freeze on all that and we conserve as much cash as possible and use it to ensure that during the transition period and then we'll get past it, there's as much service and as much employment and as much external economic benefit for society as possible. That's broken. That's totally broken.
So essentially, the incentives are not aligned at the moment, and the senior leadership
incentives are exactly set to do the 100% degree opposite of what society needs.
So to those who would have, where are the competition issues the worst? Like in terms of the global
in the long-haul international markets where airlines create the greatest global value for society, international trade, tourism, all of that.
So that's where there's currently not enough competition.
Well, you've had in the last 20 years a radical consolidation of all of that. Mm-hmm. You know, we had 20 competing airlines on the North Atlantic, and now we have 3, mm-hmm, mm-hmm. which allowed the domestic U.S. market to shrink to 3. Mm-hmm. And all of that was justified on the basis of, 3 competitors is absolutely all you ever need to protect consumers and efficiency. Well, that was obviously nonsense, because if you look at the history of aviation or any other similar industry, it's cyclical. There are crises. Now, no one obviously could have possibly anticipated a crisis of this magnitude. But once the airlines, and especially the Deltas and Uniteds and Americans and Lufthansas and Air Frances of the world, hey, we can really start to make money if we just eliminate all this competition. And if you look at the historical data, once this consolidation started, roughly 2004 was the trigger point, there's this huge diversion. Traffic grows sort of what you'd think in terms of economic activity, but revenue skyrockets. And that's all bottom line stuff because they can price. There is no threat to anyone entering the North Atlantic market. There is no threat to anyone entering the Trans-Pacific market. And all of these alliances between carriers are specifically designed to eliminate competition.
So essentially, we're at risk of losing all the benefits of deregulation and the low-cost flying environment that we became used to. So in terms of like the projection for, if things continue down this pathway, are you envisaging a sort of huge spike in the cost of flying for the average person? And what is going to happen to all that excess supply in terms of infrastructure? What will happen? I mean, because if the airlines cling to it, if they continue, from what I understand, you're saying that they have an incentive at the moment to maintain the infrastructure rather than restructure it and sell it off and allow for more competition, right? And that's a sort of monopoly. Well, that just entrenches the sort of duopolistic, monopolistic system, because the excess capacity isn't going out there to new players who might be able to pick it up for a discount and start new operations at with the price sort of balancing the market.
The investors who own and control these airlines have an incentive to block any kind of bankruptcy or other government managed restructuring, because that would wipe them out.
Right.
They have no rational hope of surviving this intact. But once you've painted yourself in the corner and told everyone this is a V-shaped recovery, and I made smart investments,
but surely the point is that after, at some point, they can't sustain that. I mean, at some point, prices are going to be at a level that is not going to sustain their businesses in terms of demand.
A blisteringly obvious point that you won't see discussed in any coverage of the industry. If you say that for some period of time, 3 years, 5 years, in a perfectly managed world, we only need 60%, 70% of the capacity that operated last year. Oh, this is an industry with significant fixed costs, and the industry rationally locked themselves into long-term financial commitments because no one anticipated that. If revenue is half of what it was, but you have all these costs, the fares have to go up.
Exactly. That's
right. And it's a question whether they go up 300% or 400%. If you have a plane that airlines, for the most part, ran at 85% load factors. If all of a sudden those are 45% load, I mean, they're 25% load factor stable, we get, let's say, to 45 or 65, well, the cost of the flight actually went up because we no longer have the large network and we're not using our airports and our maintenance bases and our pilot staffing as efficiently. So that cost went up and revenues down. Math is pretty straightforward. Fares go up.
Right. So essentially the projection here is flying is going to become a luxury exercise like it used to be.
Except that the industry had correctly realized that luxury model, the economics do not work. If you think of the airlines of the 1960s, which catered, they banned discount fares. That was unspeakable. Oh no, the economics of the industry improved dramatically when you have both the market and the business class crowd. If you lose, a business class oriented thing has been tried many times, it doesn't work.
Yes.
So they figured out a model that in a pre-pandemic world basically works. that model is broken and can't be rebuilt. And no one is saying, well, how the hell do we go forward?
And so how
And
do
the only way to
Mhm.
go forward sensibly is to do it on some kind of supervised by courts or governments, but industry-wide basis.
And so what would you propose in that sort of industry-wide resolution?
Well, this is the, you're not going to like this part of the story. Earlier, um, I started my career, as you mentioned, long ago. The freight railroads in America were in largely dismal shape, especially in the East where the industrial base was declining. The Penn Central was the largest bankruptcy in the history of the world at that point. There was a 4-year government-led program to restructure because they really realized courts couldn't handle that. And it produced Conrail, and there was a huge job loss, but you got back to a viable private sector freight railroad industry. All of the things that made that possible and made Conrail work have been systematically killed off in the last 25 years. The Department of Transportation used to have expertise about industries like railroads and aviation and whatnot. It's gone. It used to stand there as guardian of the public's interest in having efficient transportation. No, it is now the guardian of the investors who donate to political campaigns.
Okay. What needs
So
to be done to resolve that?
I wish I knew.
Okay.
But it goes back to deep-seated political problems that go well beyond the problems of Lufthansa and United.
I mean, how would you revisit that sort of environment of the railroad restructuring? Is there no way we can learn from that? And you say there's a lack of expertise in the institutions that matter, but can that not be, can there not be a sort of vocal grassroots campaign to try and save our airlines or save our low cost travel?
Well, I can think of 30 or 40 other issues where, gee, couldn't we have a grassroots effort to fix healthcare or tax systems or boom, 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 that are rather more important than whether, we're optimizing airline economics. But the root problem is the same. I don't know how to get from here to there.
That's not a very optimistic view.
No, and I think the message that I've been trying to convey in these recent articles is that they're not even talking about the most rudimentary fact base. Wait a minute, we have a serious problem here. Forget about what's the optimal solution. That, in other words, if you're refusing to deal with the fact that revenue is off by 85% and costs have only gone down by, I don't know, 25%. If you said that to any business person 10 years ago, I said, well, just shut down the company. That's hopeless. And everyone is still in the fantasy world that, oh, it'll be back to normal in a few months.
Is there sort of hope or some sort of anticipation that perhaps there will be some form of nationalization? Is that why, so rather than closing down the company, selling off the assets, there is a sort of stealth nationalization going on, and all these, duopolies, monopolies will just be effectively renationalized in the long run?
Well, there's already been, and it hasn't been stealth in a lot of somewhat smaller companies. The bailout of Lufthansa is in all but name a renationalization. Carriers like Air New Zealand or Thai Airways or Cathay Pacific, where you have one major line because that's the size of the market. That's their international link to the world. The government's just stepped in and said, we're in charge now. Now, will they make smart decisions in keeping the company afloat until it can be spun back out into the private sector remains to be seen, but that's what's happened. But no, there were
But if
Canada and Mexico says no bailout, and Canada and Aeromexico has filed for bankruptcy. LATAM and Chile will have filed for bankruptcy. Where these countries, we can't afford these bailouts that United and American are getting. We've drawn the money. You know, our people need food. They're going to focus on that. But certainly in America and in Europe, there is more of a faith that somehow markets will magically solve all these problems.
Well, is it also just that, like, it's perceived to be just still a temporary kind of conservatorship until things get better? There's still this expectation that it's just temporary, right? That's the key issue. So there's this.
But that's sort of the colossal level of cognitive dissonance that's sort of been the starting point for my recent articles. Mm-hmm. Wait a minute. Okay, on March 10th, somebody may have, in a bout of wishful thinking, thought that all these professional sports leagues would be back to their full schedule in 3 weeks. But 3 weeks later, we realized that wasn't going to happen. To look at revenue down 85% and think this is just a short-term thing requires a level of willful ignorance that is hard to imagine. But that's what's going on.
So when will reality hit, and what will happen when reality hits?
Reality hits when the governments have to keep writing the checks to keep the staff involved. And of course, one of the smaller things is, it's obviously a terrible thing when anyone loses their job, but aviation, like any other big industry, is a big economic system. It's just not the people with a Delta Airlines employee numbers. There's hundreds of other suppliers, airports, travel agents, All of the discussion of bailouts is the people who work for Delta.
Yeah.
And all of that is being done because Delta thinks that if every time there's a new rumor of more bailout money, the stock bumps up 20%. And if your entire focus is on this week's stock price, as opposed to how do we help workers,
Right. So when reality hits and the paychecks are not going to be forthcoming, it'll be a massive equity wipeout eventually. It's just we're delaying the inevitable. It'll also be a bondholder. Essentially, it'll be a total wipeout.
Well, this is, I don't want to change the subject, but this is one of the reasons I did all of that work on Uber that you're familiar with, on the theory that, wait a minute, here's a company that lost $25 billion in 5 years and has absolutely no prospect of ever making a penny of positive cash flow. Yet, when does reality hit? The world still thinks everything's fine or isn't paying attention, or, my God, we need to bail out this company because it's so important. The evidence of the magnitude of the problem is so overwhelming. And you start going, and I was involved with all of these airline bankruptcies in the 80s and 90s. In every case, there was at some point reality hits. And one of the things that you've seen in the last 20 years is that the systems are now designed to continually prevent reality from hitting, which means that all of the normal things that would fix a broken company and reallocate resources on behalf of society to where it can be used better have been broken.
So we're not living in a world.
And Uber was my little test case. Let me show you this in the most simple. What industry could be simpler than a bloody taxi company that's got drivers, vehicles, and fuel? Everyone can understand that. Airlines are somewhat more complicated. Banking is way, way, way more complicated, as you know. But wait a minute, the underlying, the markets aren't functioning properly. The political system isn't, all of the benefits the society is dependent on are being ignored.
Right. So basically, we either live in a disreality which sort of transfers the Uber investor enthusiasm in some sort of disreality, suspends investors' sort of disreality for a while, but eventually, you know, reality will hit. I mean, but with Uber, we're still not entirely hit there. So,
Right.
so it is, you know, and I think there is then another discussion to be had about, you know, central bank quantitative easing and liquidity operations, and how that is actually indirectly fueling that and perpetuating that disreality. But that's probably a conversation for another time. What's your closing big thought?
You know, improving the efficiency of an industry, of a company, is really, really hard work. Rigging the stock price and creating a narrative to bamboozle lazy reporters and lazy politicians that everything is fine and we're in control is easy. You know, the airline industry, well, the 4 US carriers did $50 billion in stock buybacks in the last few years. Guess what? That's $50 billion that's not keeping the airlines afloat now. Everyone said, you know, we'll never have another downturn, ever. You know, the airline industry couldn't even cope with sort of the plain vanilla recession kind of downturns we've had many times in the past. And so how does anyone think it can handle this? And again, you've hit the point several times, huge benefits here from any kind of transportation infrastructure, and this is one that's global. You know, the interstate highway system just collapsed into dust tomorrow. Oh my God. You know, if London transport just shut down tomorrow, oh my God, there's so much economic activity dependent on that. But, you know, the people who run London Transport, with all their flaws, do understand that they're supporting that kind of economic activity. The people who are discussing the airline situation are clueless about that.
For now, thank you very much for giving us your overview, and we look forward to reading your work in the near future.
Thanks so much. Wish I had a slightly more cheerful message.